I think you get to a certain point sometimes in your life where you can choose to change your life or you can continue on as you are. And I think that's what's happened for me. I'm going to turn 50 this month. I'm like, do I want to continue on this pathway or do I want to take a small risk and actually try and improve our lives a lot? So I think it's, I'm on a good salary. I don't think it's anything to do with that. I've got a good superannuation plan through my employer. So it's nothing to do with that. We've got two kids, 18-year-old and a 20-year-old, still living at home, and they're on their pathways in their own lives. So that's a very important consideration for me as well.
Hello and welcome. You're listening to Dash.Insider, the auditory epicenter for passionate property investors seeking a life of freedom, choice, and abundance. Joining me today, one of our clients, Matt Singh. Matt, how's it going?
Good morning, Emil. How are you going?
Yeah, very well. Thank you. Thank you so much for jumping on to our podcast episode. I think this is going to be a really, really important and interesting episode for a lot of people that might be listening to this. And the reason that I say that is because your property journey, a lot of people try to start in their 20s or maybe their 30s. In your case, that's not quite what's happened. Can you tell us a little bit about where you're at and what your journey's been like so far?
Well, I'm actually turning 50 this month. So, yes, I guess my pathway is not, the same as other people's pathways. A lot of people start younger. A lot of people might start in their 30s or 40s. And I guess it was, a concern of mine, being my age. Was it too late to start doing something with investment? Yeah.
Right. Okay. Without wanting to sound too blunt, why did it take so long to decide to get into property investment? Or what was obviously there must have been other things that were happening. What sort of delayed the decision?
This is an interesting part of my story because, in hindsight, I wished I'd started doing something like this a long time ago. And my life, I feel, would be very different. But our story is that my wife and I, in around 2007, invested in or borrowed to invest in the share market. So we already had a relatively large mortgage, but the advice that from a company that we came across at that time was to borrow $200,000 and to invest it into the share market. And so half of that loan was an equity loan, which is secured by value in our property. And to be able to borrow more, the other $100,000 was secured by the investment. So it was a margin loan. Yeah. And of course, I think everybody knows what happened in 2008. There was a massive crash in the stock market, and that's where everything went pear-shaped for us. So not only did we get a margin call and go through a very stressful time and throwing a lot of money into this investment to try and keep it running, but the other downside to it was we found out there was a lot of hidden fees that we didn't know about at the time. And that was only unravelled once everything had sort of crashed and we'd sort of come through the other side of that. Ended up with a very big capital loss, which was one advantage, I guess, because you can store capital loss. But when it was unravelled, and I think the ANZ Bank was helping us at the time, one of their financial experts, they discovered a lot of hidden fees and just not nice things that were going on that we were never aware of, that was never disclosed. So combined with losing a lot of money and the whole, what we saw as dishonesty in the investment scheme really scared us. And so much so that we didn't do anything until now.
I have heard quite a few horror stories of things that happened to people who'd saved up a lot of money and grown equity and then gone into stocks and shares at around about the same time. In your case, were those in Australia? Was it Australian shares or was it a global portfolio?
It was a mixture of a portfolio, a mixture of various, Australian and international managed funds.
Okay. The thing about when you're leveraging to buy shares, when a margin call comes in, I've heard of a case where there was a woman whose husband had passed away, and he had left her with around about $5 million. And she spoke to one financial planner and said, look, $5 million, we can get you a very comfortable 5 to 7% in an index fund, nice and secure. She spoke to another financial services company, and they managed to convince her to leverage up and to double the portfolio. And so she used that $5 million that she had to borrow another $5 million and put it all into the stock market. The GFC hit and her portfolio went down by 60%. And the thing about that is that now you're actually below, right? If it's gone down by 60%, you're down to 4 million, which is below the 5 million that she had. And they don't let you hold on until it bounces back at that point. At that point, it's like you had the margin call comes in and they say, right, you have to sell. And so they said, well, your $5 million is gone and you owe us another 1 million or you owe another 1 million. And the financial services company, they did fine. For them, it's like, no, we got our fees anyway, so we're okay. And we tried very hard, but it's a little bit unfortunate what happened to you.
Yeah, it's a very stressful time when a margin call comes in because you've probably already got all of the bills of everyday life and then you're given a very strict time frame to come up with a certain amount of money to keep things running. But there's also the threat of another margin call as well because, it's so volatile. It was a stressful time. We ended up borrowing money off my wife's grandfather, which is not a nice feeling, but you just have to try and do what you can do to keep things running.
And you're in that sort of tricky situation where it's gone below the margin. You have a very short time frame to come up with a whole lot more money. And it's like, do we give up on that money and it's gone? Or do we try to get enough so that we can hold it so that it can bounce back up? And then if you borrow a bit more and it drops more, then you just get called again and you're in the same situation. So that sounds like it was a very rough time. I probably shouldn't dwell on it as much as I have.
I think you've hit the nail on the head because the hardest thing in that type of investment is, look, do we cut our losses now or do we try and wait for the share market to come back? And you just don't know what's going to happen.
That is something that I've seen happen sometimes in commercial property. I mean, we could probably do entire podcasts on shares versus, and we have, on shares versus property or commercial versus residential and having a look at the different property types. So you went through this fairly horrific experience and you've managed to bounce back. How did that happen?
Yeah, well, I'm lucky that I have a secure job. I'm a paramedic. And so that has helped, I guess, having a secure job. I've been a paramedic for 27 years. And so that's been really good. I mean, having a secure income coming in every fortnight has helped. And my wife has always wanted to invest in property, but since that time when we did invest in the managed funds and whatnot into that scheme, that whole nightmare of what went on has prevented me from jumping the fence. And so I wish that I'd followed my wife's advice because she was always good at finding good little properties or whatever, or it might be a block of land. And then 10 years later, she'd say, remember I said that would be a great idea to invest in that block of land and look how much it's worth now. She always had a very keen eye for land or property, but I just couldn't take the risk again. It was just such a big nightmare going through that previous experience that it just scared me.
Okay. And what changed? What changed that helped you eventually take the leap? Is there anything you can pinpoint?
Well, it obviously wasn't my wife because she's always wanted to do stuff. But I think you get to a certain point sometimes in your life where you can choose to change your life or you can continue on as you are. And I think that's what's happened for me. I'm going to turn 50 this month. I'm like, do I want to continue on this pathway or do I want to take a small risk and actually try and improve our lives a lot? So I think it's, I'm on a good salary. I don't think it's anything to do with that. I've got a good superannuation plan through my employer. So it's nothing to do with that. We've got 2 kids, 18-year-old and a 20-year-old, still living at home, and they're on their pathways in their own lives. But so that's a very important consideration for me as well, is trying to create some sort of legacy as well for them. Because, it's hard for kids these days, and they're not on much money per hour, and it's going to be hard for them to get into the property market or to buy their own house. So that was a really important consideration for me as well. So a lot of the reason that we want to do this is to actually help our kids out.
Yeah, I think that's a big concern. We talk to a lot of prospects, a lot of clients here at Dashdot, and a lot of people are really worried about that. They're like, we're the lucky generation because we can get in. With the prices where they are at the moment, they're still okay for us to get in. But what's going to happen in 10 years or 20 years? Where are the prices going to be? And even if someone has a good job, what are their chances really of being able to get, they're going to need an exceptional job or some help. And so a lot of people are now setting up properties and structures so that they can help the next generation, they can help their children through, so that they can be in the group of haves instead of the have-nots, to put it maybe a little bit brutally. I think the real message that I'm getting...
Sorry, I started to see that stress in my kids, the pressures of life and the pressures to succeed and to save up and buy property that is quite hard to do. I started to see some of that stress in our kids, and I wanted to be able to take that pressure off them and for them to be able to enjoy their lives.
Was it anything specific that you were noticing about them, or behaviours or anything like that?
They were just looking at stuff online, and they were looking at the prices of properties, and they just felt that they were never ever going to get from point A to point B. And so they also wanted to enjoy their lives as well, and to do some holidays while they're young and go out and enjoy life. And it was just overwhelming, the whole thought of how are they going to do that when you're on, not much money.
Yeah, that could be very demotivating, I think, for an 18 and a 20-year-old looking at the way the property prices are at the moment. It feels like it's quite different from when you or I mean, we're approximately the same age. I'm 46, 47 in a few months. Gosh. But looking back, when we were sort of in our 20s, you could look at property prices and you could look at it and go, oh yeah, I'll be able to get one of those one day. And, it seemed like a natural thing. You have your own home. I happen to be in Japan at the moment, but I've had my own home in Australia, of course. And it just seemed like a natural thing for people of our generation to go through. And when we were looking, a lot of people who were into property investment, the way I was 20 odd years ago, would be looking at properties, and you can sort of plot a pathway, and an attitude towards risk was normally sort of, leverage up. What's my borrowing capacity? I want to borrow to the maximum. And I think the difference between you and me is that for me, it just happened to be property. I had a background with a father who was a real estate agent, a builder, and he'd done property developments. My uncle's a builder. I just had property sort of written all over me, and not everyone is fortunate in that way that they've just been taught from when they were, that tall, going to inspections and things like that. Property's how to build wealth. And so then a lot of people see shares as an alternative. They can be a little bit faster, and I think we're seeing the same at the moment with crypto. A lot of people are looking for the property might take a little bit too long. Let's have a look at crypto, and it's in the media and everything like that, and it shoots up. And I've spoken to a lot of people over the last 3 or 4 years, friends, colleagues, strangers, and, the crypto conversation pops up. And it seems like that's the new kind of, are we on the precipice of crypto collapsing and things like that? It's one of those extremely volatile things, very, very volatile. Whereas I think for people who are a little bit younger, the attitude towards risk is a little bit different. But you mentioned that you're coming up towards 50. The attitude towards risk is obviously a little more conservative. Would that be fair? Because you don't have another 3 or 4 decades to earn it back. You need to get things secure within the next 5 to 10, right?
Yeah, and that's a very important consideration for where we're headed in our journey. like I think with what you were talking about there, it's something I see in the younger generations. It's very different to when we were in our 20s. The kids are so wanting to get to point B like this very, very quickly.
That, I think, is a problem. We have a generation of people who are raised without having to endure the patience that our generation had to for anything. Everything's on demand now. If it's television and then you want to watch a TV show and it ends on a cliffhanger, you have to wait a whole week. Whereas now on Netflix, you can just watch the whole series in a weekend and then it's done and it's gone. Uber Eats, you don't have to cook anything. You don't have to wait for anything. You could just it's an app on your phone. Boom, done. You want to socialize with someone? You don't have to sort of phone them up on a dial-up and arrange to meet somewhere. You can just start texting. And so there are a lot of studies that have said that younger generation, there's increased levels of ADHD, increased levels of anxiety, because you can't always get the dopamine hit immediately that you're used to. And that level of impatience combined with, property might be a bit tricky. You might have to wait 5 or even 10 years, heaven forbid. Whereas something like shares or crypto, it gives them, it fuels their impatience even more and it can become more attractive. But I think 5 to 10 years, that's what the vast majority of our clients are looking at, right? They're looking at hitting save within 5 to 10 years. It sounds like you're sort of probably on the path to doing that at the moment. You've bought one property so far. And at Dashdot, we often talk about how we're about creating the freedom, choice, and abundance so that people can live their best lives. Property just happens to be the vehicle, and we like it because it doesn't have that volatility. It doesn't have that risk factor that can end up having all of someone's finances kind of wiped out. So with that in mind, what's the big picture? What's the dream beyond legacy? Is it, buying a golf course? Is it where does this end? What's the end game for Matt Singh and family?
I hate golf. I can't even hit the damn golf ball.
Yes. Is it Mark Twain? Or Churchill? A nice walk ruined.
Yeah. I think that is one of the nice things that Dashdot was really focused on at the start of our journey. Is I think their primary concern is, where do you want to go with this and what are your goals? And so we very carefully mapped out, where do you want to be in a certain time frame? What do you want to do? And that was really nice that, everybody involved felt concerned about, improving our lives. So our key thing was that we live in Ballarat, which is a pretty cold spot in Victoria. But my wife and I don't see ourselves retiring in Ballarat. So a key thing for us, after being up recently on the north coast of New South Wales, there's a different world outside of Ballarat. There's a different world outside of what you're used to. There's so many things in life to enjoy. So a key thing for us is to be able to one day afford a nice property and live on the beach somewhere. And I don't think we would have ever been able to, we have a fairly comfortable lifestyle, but it wouldn't be living on the beach probably. So yeah, that's something that we want to do. Not only create that legacy for the kids so that there's some equity happening in the background or some property growth, but to be able to go and retire and live in a nicer property one day in a nicer spot. Yeah. And it's pretty simple, really. And how we get to that point B, I'm completely being guided by Dashdot and all the experts that we've been involved with.
Okay. So that's the big goal. The house on the beach, is it definite north coast of New South Wales?
No, there's conjecture. So my wife loves a place called Christie's Beach over in South Australia. The only thing is, I think that it would be far too cold there for most of the year.
Right. That's a consideration. I would have to say, as a Kiwi going from Auckland, where it's not super cold, right? It's not like Tokyo here. It doesn't get super cold or anything like that. But once you've lived in Southeast Queensland or Northern New South Wales. It's hard to think of anywhere else. It is a pretty amazing little part of the world, and it's nice and civilized. It's just so picturesque. It's just absolutely wonderful.
A town that we stayed in very recently called Brunswick Heads, and it's north of Byron Bay, but Brunswick Heads is the most amazing place. The council don't allow really any development to occur. So it's only a population of about, I think, 1,600 or less than 2,000. It is just a beautiful spot to be. There's beautiful restaurants. It's a small town. It's right on the beach. It's just amazing. And no development. It's very rare to find a town like that, right on the beach.
So if I were to ask you then, how likely is it, do you think, that you're going to end up there? Or, sorry, I'll rephrase the question. How likely is it that you're going to be financially secure enough to be able to move there and enjoy the retirement you deserve?
Somewhere like that. I mean, keeping in mind that Brunswick Heads is very, very expensive real estate. I think the pub that sold there, which is a beautiful pub, but it sold for something like $68 million.
Oh, okay.
Yeah.
I heard the 6 at the beginning of that, and I thought 6 million's a lot, but there was an 8 after it.
Yeah.
Okay.
So
your confidence...
I'm confident that we're on the right pathway to achieving a much better lifestyle than where we were headed.
Do you have a number of years or a time frame in mind that you've been told that you're working towards?
So that was the time frame we sort of set was around 10 years. And the reason we set that time frame was because of preservation age with superannuation. Even if I wanted to retire today, the big issue for people, in our ages is preservation age. So I can't actually access any of my superannuation until I'm 60. And there are clear benefits to not accessing it, because if you access your super after the age of 60, it's tax-free. So that's the time frame we're working on, which, it seems like a long time, but when you get to nearly 50, it doesn't seem like a long time to me all of a sudden.
I know how that feels. It's like, wasn't it New Year's yesterday? And, by the time this airs, it's probably going to be May. It's like, time does feel like it's speeding up. So 10 years doesn't feel like it's a particularly long time once you're sort of getting as long in the tooth as we are. I guess there are 2 really, really important lessons here. And the first is sort of, if you're listening to this and you're in your 20s, maybe your early or mid-20s, if you can start early and if you could just manage to get access to enough credit, and there are a lot of creative ways that people in their 20s can do that, then if you're looking at a 5 to 10, maybe at the outside 15-year long time frame until you can do what we call hit save, which means you're free, you're financially free, you reach financial independence, you don't have to worry about money anymore. Now, that might be by the age of 35, you're clear. So that's, I think, a really, really important message. It might seem like it's a long way away, but if you make the right moves in your 20s, you'll be incredibly thankful and grateful to yourself in your mid-30s. And the other message is, even if you're coming up on 50, even if you're in your 40s, a lot of people think, oh, it's too late. I'm stuffed now. But I think you're testament to the fact that that's not true at all. Even if the best time to plant a tree was 30 years ago, the second best time's right now, and you've done that. You've taken the leap.
Yeah, I think there will be listeners out there thinking exactly as I was, that, it's too late. I don't have any real cash set aside, and I need money. And, people get trapped in the, high utility bills and mortgages and family and all of the other expenses in life. And so what we were able to do is use equity in our current property where I am now, and to be able to start that journey. That's really important, because if I had that thought of having to save up some massive deposit to start the first investment property, even though I'm on a good salary and got good superannuation, which I can't access, That was a real concern, but, Dashdot helped me through all of that. And so we used equity, and the rest is history. We've now got our first property. We've got tenants that are already paying rent. I think that's the amazing thing about the investment property, because even if the property market was to go down for a short time, we've still got rental income coming in every week. So I'm really not stressed about it.
You're not stressed? After everything that you've been through, after all of that, and working as a paramedic helps that, because you might be looking at your portfolio and thinking, well, at least it's not life and death.
No, I mean, you would think that this whole process would be stressful, but I think what it's done for me is to be able to drop my stress levels back, which is weird. I never would have thought that would occur. I'm very comfortable with where we're headed now, and totally trustworthy of Dashdot and all the beautiful people that we've dealt with. It's actually reduced stress and anxiety in my life. And
I didn't expect that. I thought that there would still be some sort of this is the biggest purchase that you're making in your life. You've bought this property. It's north of $400,000 that you've put into it. I mean, it's a great property, but still, it's a high ticket item. And normally when people are buying a high-ticket item, especially after being burned previously in other investments, there's this sort of it's settling. Is everything going to be okay?
Yeah, but I think where that comes from is that everybody that we've been referred to by Dashdot, as far as the conveyances in Sydney that we were set up with, just beautiful people, top-notch companies, property management team that's now involved in looking after our property. Everybody that we've been referred to, even the, as far as financial, the company that we were set up with to look after setting up loans, and the broker, it was a broker, they're all top notch. I've used brokers in the past. I've used conveyancers. I've never used property managers before because we've never had a property, but this is next level. The service that we've been provided, I was unaware of how good companies are, because we're just used to dealing with the normal in life.
That's really, really nice to hear. Thank you so much for that, Matt.
So that's where the relaxation comes from, because the communication is just so clear, and the honesty going along the way, and tiny little hiccups or here or there, but the honesty and the whole process just been amazing.
I think one bit of feedback that we do get sometimes is that the ability to deal with the unknown unknowns, because you don't always know what little problem might pop up, but it needs to be solved, and you need to have confidence that the people that you're working with are going to be able to solve little hiccups and do the right thing and sort things out. So thank you very much for those comments, Matt, and that might be a really nice note for us to finish up on. So, Matt, it's been an absolute pleasure, and just to reiterate, what I think I've got from this most is it's never too late. If you're listening to this and you're thinking, 35, I'm 40, I'm 45, I've missed the boat.
Yep.
Just, there's another one coming, and you want to get on it, because you don't want to keep on missing them.
No, just go for it.
All right. Well, thank you so much, and you have a wonderful day.
Yeah, thank you.
Cool. Thanks.